Stocks versus crypto. Two of the most talked about investments today, but which one is actually better? Should you stick with stocks, dive into crypto, or maybe balance both? In this video, we'll break it all down: the pros, the cons, the risks, and the smart way to think about these two powerful asset classes. Let's start with stocks. When you buy a stock, you're literally buying ownership in a company. If you own Apple stock, you own a tiny piece of Apple. That means your wealth grows as the company grows. Why do people love stocks? The stock market has existed for over 100 years. The S&P 500, which tracks the 500 biggest US companies, has historically returned about 10% per year on average. That means if you invested $1,000 years ago and stayed patient, it would have grown into tens of thousands today. Dividends. Some companies share profits with shareholders in the form of dividends. That's money going into your pocket just for holding their stock. Ownership in real businesses. Stocks are tied to actual revenue, products, and customers. That makes them grounded in reality. But there are downsides. Stocks can be slow to grow compared to the hype of crypto. And during recessions or market crashes, even strong companies can lose 20–30% of their value temporarily. So while stocks are powerful wealth builders, they require patience. Now let's talk about crypto. Unlike stocks, cryptocurrencies like Bitcoin and Ethereum aren't ownership in companies. Instead, they're digital assets that live on the blockchain, a decentralized system with no middleman. Why do people get excited about crypto? High growth potential. Bitcoin was worth less than $1 at one point, and it grew to tens of thousands. Some early investors became millionaires. Innovation. Beyond just money, blockchain technology powers smart contracts, decentralized apps, and even NFTs. This technology is still evolving, and some believe it's the future of finance. Accessibility. Anyone with internet can buy crypto instantly without needing a bank or broker. But here's the catch: crypto is extremely volatile. Bitcoin can gain 40% in a week, but also lose 60% in a month. Unlike stocks, crypto doesn't have decades of history to prove itself. And regulations are still catching up, meaning governments could change the rules overnight. It's a high-risk, high-reward game. So how do stocks and crypto compare directly? Stability. Stocks are backed by real businesses, so they're less volatile. Crypto is highly speculative. Returns. Stocks average steady 8–10% over time. Crypto can do 200% in a year or drop just as fast. Stocks usually require a brokerage account. Accessibility. Crypto is global and available 24/7. Stocks have over a century of data. Crypto has just over a decade. It really comes down to how much risk you're willing to take. A smart strategy is to treat stocks as your foundation. Think of it like building a house. Stocks are the bricks and cement, steady, reliable, proven. Then, if you want to add extra flair, allocate a small percentage of your portfolio, maybe 5–10% into crypto. That way, you benefit from crypto's upside potential without risking your entire future. This approach is called diversification. It balances long-term stability with high-risk opportunity. At the end of the day, both stocks and crypto can help you build wealth, but they play different roles. Stocks are for long-term growth and stability. Crypto is for innovation and big risk-taking. The key is to know your goals, your risk tolerance, and to never invest money you can't afford to lose. So, what do you think? Would you rather play it safe with stocks, go all in on crypto, or build a mix of both? Drop your answer in the comments below, and don't forget to subscribe for more videos on money, investing, and building wealth. Until then, on to the next level.